I always say this to you, but on the surface, this looks pretty good.
It is very good, even though I would argue the expectations had come down quite a bit, and the buy-side expectations were higher for next quarter. So on the surface, it may feel like a 40% upside to what the consensus number was, but it's probably a little lower than that. Look, I think what it goes to show is data center demand is off the charts, and that's what the guidance shows as well. And with a name like this, when everyone is so focused on it, they have delivered. And I think there is a good reason why they have delivered is because of the robust demand.
So I want to point out, so the data center growth, 14% growth. Their other main units, even though they were a beat, were down, had negative signs in front of them. What does that tell you?
Yeah, so their focus is right now on the enterprise side. The consumer side, the gaming side has been weak. We know that because the PC market has been weak, the smartphone market has been weak. So it's not surprising that gaming is negative. And that's the cyclical nature of their business. I think what this company has showed is data center is now 60% of their revenue. 5 years back, it was less than 5%. So clearly, I think they've found new applications where their technology and the chips can be used. And there is a software element, and the auto side is also new, which could be huge. And that's what justifies, the premium multiple. I do think when a stock is priced for perfection, you have to deliver a beat like this.
And this was priced for perfection. We were talking a lot about this, 100% gain in the first 5 months of the year.
It's wild, but it's not a pure play AI stock necessarily. It's kind of a way around it almost. And what's worth mentioning, some of these other chip makers are popping on these Nvidia results. AMD, Micron, Intel. Talk to us about the sector story here. It doesn't feel like this is just AI. To your point, it's automotive as well.
Yeah, and look, I think the drivers are there. I would say there are risks as well when you look at the China ban, which happened this week. It affects pretty much every semi name. So that's why you'd want to see numbers like this from Nvidia and even others that are reporting. That wasn't the case with Analog Devices this morning. So it is different, and I would say different segments within the chip markets bottom at different times. That has always been the case. What we are seeing right now is data center and automotive continuing to be strong. The consumer side, PC, smartphones are weak, and they will bottom eventually. But right now, I think because of the diversification aspect, Nvidia numbers look really good.
Oh, how do you square this then with one of the broader themes in Asia, for example, where CapEx for a lot of these semiconductors is something that they're looking at in kind of this post-supply chain crisis, pre-recessionary period? When does that catch up to some of these bigger names?
Yeah, so look, for the fabless companies, they will continue to rely on a TSMC to make the CapEx investments. And that's the beauty of NVIDIA's business model. They have 66% gross margins, software-like gross margins, and they don't have to make CapEx investments like Intel has to do or TSMC has to do. They will continue to rely on the fab makers to diversify their supply chain. NVIDIA is relying on TSMC to kind of move their fabs out of Taiwan and make the chips elsewhere.
They've made a lot of gains in this business, that is, on the stock. And I am curious about that proverbial moat, if you will, here. What sort of protects them from some of their competitors finally waking up and realizing that we want a part of this as well?
And so I don't think the competitive threat is going away because all these hyperscalers are investing in making their own chips. When you think about where that data center demand is coming from, 60% is still hyperscalers. Your Amazon, Microsoft, and Google. They're buying NVIDIA's chips, and they're also investing in R&D to make their own chips. So clearly that is a threat. Tesla did that back in the day when they moved off of NVIDIA. Apple, I don't think, will end up using NVIDIA. So the large players always look for vertical integration. I think that risk always remains, but then the enterprise side is huge. It's not just the hyperscalers, and that's where NVIDIA will continue to do well.
Mandeep, a final question on this AI kind of tailwind. One of the damp cloths is essentially regulation, all the warnings against using it. How does that kind of dampen, for lack of a better term, these 14% gains we're seeing in NVIDIA?
Well, so I think regulators will try to limit the application side of it. In terms of the R&D investments, that will continue. Everyone will try to develop the new cool app, the generative AI app that people want to use. How do you control it in terms of the usage? That is what the regulators will focus on. So I think it will be less of a headwind for the chip makers.